Hi everybody, this is Lara at Elliott Wave Gold and Elliott Wave Stock Market. I'm going to give you a really quick update for two cryptocurrencies this week, Bitcoin and Dogecoin. I had already recorded this video, but due to a technical, or actually an operator error, I have to discard that, so this is going to be super quick. I've already updated the charts. I wanted to show you the process I go through and the thinking I go through. I mean, I can't do that anymore because I've already done it, but it was pretty simple and pretty quick because we're only updating a week's worth of data. My last analysis in the last video I put up on this channel, I told you I was going to put some charts underneath the video on my website, and I did, and I worked a little bit more on the analysis, and I came up with the conclusion that for Bitcoin I was expecting a little bit of downward movement for C to move below the end of A. It's done that. My target for support was about 49,500. It moved a bit below that, and it's turned up strongly from there. This is a really bullish candlestick here. I think the intermediate 4 is over. It subdivides as an expanded flat. Minor B is a 1.3 length of minor A, so it's within that common range of up to 1.38. There's actually no Elliott wave rule that states how long a B wave can get. In relation to A, there's a guideline that says when B reaches twice the length of A, you should discard the idea based upon a low probability, but I have seen B waves that are actually longer than twice the length of the A waves in historic data, when that's the best way to see the movement. Anyway, what all that means is here B is within the most common range. This is a perfectly acceptable structure, and it subdivides beautifully. 3, 3, 5 for C. I played with some target calculations. I've got two targets now for primary wave 3, and I did say that when intermediate 4 is over and I know where intermediate 5 has begun, I can add to the target calculation at another degree, an intermediate degree. That's what I've done. I've chosen this Fibonacci ratio because of this. If you go back into the historic data for Bitcoin, this first rise up here, this is the high in December 2017, just under 20,000, and then it had a big crash, an 84% correction in price value, which lasted a year for cycle wave 2. So cycle wave 1's a perfect impulse. 1, 2, 3, 4, 5. I've got a bunch of notations on this chart because I'm using these ideas to play around with target calculation. Within primary wave 3, we're looking at intermediate degree waves, because here within primary 3 we're looking at intermediate degree waves. So what if the same relationships that we see in here we're going to see here again? What if it does that? Well, primary wave intermediate 3 was 16.42, more than 46.978 times the length of intermediate 1. That's a Fibonacci ratio. It's an extreme Fibonacci ratio, but it is technically correct, or mathematically correctly, a ratio. Here is a more commonly used but still uncommon Fibonacci ratio. Intermediate 5 equals 66.16 times, is 66.16 longer than or greater than 4.236 times the length of intermediate 3. That's how to read these notations I've got here. So there is a Fibonacci ratio between intermediate waves 3 and 5. 5 is a bit longer than 4.236 times the length of intermediate 3. So what if we see that again? Here, intermediate 5 would be 4.236 times the length of intermediate 3 at 267,001. So that is how I've calculated that target. Here I'm looking at primary degree. Primary 3 would reach 38.87 times the length of primary 1 at 417,507, and I've got that from here. Now this is not a Fibonacci ratio, but here within cycle wave 1, this primary 3 beginning here and ending here was 38.87 times the length of primary 1, which began here and ended here. If we see within cycle 3 that same relationship play out, then that would be the target. So these are wildly different targets. I'm well aware of that. They are highly provisional. I am being flexible and open-minded, really open-minded with how I approach target calculation for Bitcoin, and I'll be looking for highs based on classic technical analysis, not my Elliott wave targets. It's just some numbers to play around with. Okay, so I think Bitcoin's found a low. What about classic technical analysis? Does this support the view? Okay, here is Bitcoin on a daily candlestick chart. Let's look at some classic technical analysis. At this low here, we've got a couple of bullish long lower wicks. Here we've got a hammer candlestick pattern. I don't think this one is a hammer. For a hammer, you need to have the wick twice the length of the real body. This one looks too short. I'm not going to bother calculating that. I'm just eyeballing it, and it looks not long enough. But it is a bullish long lower wick, and I do give weight to candlestick wicks. So we've got two bullish long lower wicks, a bullish reversal pattern here, another bullish reversal pattern here, and a huge bullish engulfing candlestick pattern, which very importantly has support from volume. Let's look back at these pullbacks. Here we've got a bullish candlestick pattern. This is a bullish engulfing candlestick pattern, but it doesn't have support from volume, so we have to be slightly suspicious. It was followed by new lows. Here, a strong bullish engulfing candlestick pattern also did not have support from volume, but that was a sustainable low. So sometimes Bitcoin starts its new movement slowly, but when you do see support from volume, then you can have more confidence. What about this? Here's a hammer followed by a bullish engulfing candlestick pattern, which did have a little support from volume. I'm comparing it to the two candlesticks prior. Volume starts to pick up on that bullish candlestick. Yes, we have some confidence in that, and yes, it was a sustainable low. That low has not been exceeded. Again, here's another one. How did this perform? This one didn't have good support from volume compared to the two candlesticks prior, and now we've got a low exceeding that, so that's interesting. Now we've got another big one. It does have support from volume. When we see that from Bitcoin off lows, I give it weight. I think Bitcoin's found a low and it's on its way up to new highs. Okay, now let's take a look at Dogecoin. I've updated this as well. I think this little fourth wave correction, probably a zigzag, could be a flat, but I don't have hourly data, so I can't check the subdivisions. It's academic now. It doesn't matter what structure it was. It looks like it's over. I'm still expecting another 1, 2, 3 short-term pullbacks along the way up for Dogecoin, looking like this one or a little bit bigger in terms of duration and possibly size as well. My weekly wave count for Dogecoin has 1, 2, moving through the end of a third wave. Here's the detail of the end of the primary wave 3. Let's take a look at some classic analysis for Dogecoin. First of all, a weekly chart. It's got this bearish divergence between price and RSI, and price at the weekly chart level remains quite deeply overbought. And so that's concerning for the short term. It sometimes just disappears though. Let's look at the daily chart level. We've got a strong hammer candlestick pattern. We've got some bullish candlestick patterns. This one, importantly, is starting to show support from volume. We're starting to see a curved bottom and starting to see strength up off lows. That's what I look for in these cryptocurrencies, to identify lows in place. At this time frame, ADX is declining. There's no clear trend. If it increases, it'll be above 45 and above both directional lines. And so it would still be very extreme, but for this particular market, it can sustain that for a long period of time. On balance volume, broke above resistance. It's confirming highs in price back here. We haven't got new highs yet, so that's not of a concern. RSI is well in neutral territory, plenty of room for price to rise or fall. Is MACD still bullish? Well, neutral to bullish. And stochastics neutral. And the moving average situation is still full ball bullish.